In this video, we're going to focus on how to actually draw support and resistance levels correctly on the chart in a clean, practical, and repeatable way. By the end of this lesson, you should be able to open any chart and confidently draw key support and resistance levels. Let's get started. So, how do we draw support and resistance levels? This is Robinhood stock in daily time frame. In these areas, there are multiple rejections. There are swing highs and swing lows. The moves are drastic. The level is obvious. These criteria make this a very strong level to focus on. Moving to the next area, we again see multiple rejections. The moves are drastic, and once again, the level is obvious on the chart. In this area, the story is the same. There are multiple rejections, the moves are drastic, and we can clearly see swing highs and swing lows forming around the level. Now let's go to the next area. Here, there are multiple rejections, and we can see that previous resistance becomes support. At the next level, there are again multiple rejections, confirming the importance of the level. Finally, at this last level, we have a clear swing low, and once again, the level is obvious. In these areas, there are multiple rejections. There are swing highs and swing lows. The moves are drastic. The level is obvious. Previous resistance becomes support. These criteria make this a very strong level to focus on. Next, we are going to talk about drawing zones instead of lines. Let's come back to our first example for a moment. Earlier, we drew two horizontal lines here because price reacted at slightly different levels. Now, this is very common in real markets. Price doesn't usually reverse at one exact price. Instead, it reacts within an area. When we try to draw multiple lines like this, the chart starts to look messy. And when a chart looks messy, it usually means we're overcomplicating things. This is where drawing a zone makes more sense. A zone simply combines those nearby reactions into one clean area of support or resistance. The important thing to understand is this. The market does not see lines, it sees areas. So whenever you find yourself drawing multiple lines close together, that's your signal to stop and draw a zone instead. A common point of confusion when drawing support and resistance is deciding whether to use candle closes or wicks to define levels. In the first example, one school of traders would insist on drawing the level using candle closes, like this. The idea here is that candle closes represent where the market accepted price. When we draw the level this way, we can see that price has reacted at this level 5 times. In the second example, another school of traders would draw the level using the wicks, like this. Their reasoning is that wicks show rejection, where price was pushed away. But when we draw the level this way, price has only reacted at this level 2 times. And this brings us to the key takeaway. Whether you draw the level using candle closes or wicks is less important. The rule of thumb is to draw the level that captures the maximum number of touches. In this case, the candle close level is stronger because it has 5 reactions, compared to only 2 reactions using the wicks. Next, we will talk about role reversal confirm strength. So far, we've focused on how to draw support and resistance. But drawing the level is only the first step. The real insight comes from how price behaves once the level is tested or broken. One of the strongest confirmations of a valid support or resistance level is what happens after it breaks. When resistance breaks and then holds as support, or when support breaks and then holds as resistance, this is called role reversal. It shows that market participants are now defending the level from the opposite side. This is an example of the Aussie. In this area, we can see multiple rejections, which immediately tells us this is an important level. It's an obvious level. When price moves up into it, it gets rejected. And notice how price moves away from the level. These moves are strong and decisive. Later on, when price moves up again, it breaks through the level and turns what was previously resistance into new support. This behavior makes this level an A+ level. When resistance breaks and then holds as new support, it tells us something very powerful about market behavior. Earlier, sellers were defending this level. Every time price moved up, it was rejected. But once price breaks through the level and closes above it, control shifts from sellers to buyers. When price comes back down and holds the level as support, it confirms that buyers are now defending the same area. This tells us the level is not just a random line on the chart. It's a level that the market recognizes and respects. That's why role reversal confirms strength. The level has been tested from both sides, first as resistance and then as support. The more a level proves itself through role reversal, the more attention it deserves from traders. You've learned how to draw support and resistance correctly, focusing on obvious levels, using zones instead of forcing precision with lines, understanding when to use candle closes or wicks, and why the number of touches matters more than exact price. You've also seen why role reversal is one of the strongest confirmations of a valid level. At this point, you should be able to open any chart and confidently draw meaningful support and resistance levels. But remember, support and resistance do not tell you when to enter a trade. They tell you where to pay attention. In the next lesson, we'll build on this foundation and learn how to prioritize the most important support and resistance levels. Thanks for watching, and I'll see you in the next lesson.